Hey guys, welcome back to another Stock Talk. Today is June 3rd at 1:30 p.m. Eastern Time. Thank you once again for all of your comments. You guys know what I'm saying, but yeah, it is very much appreciated because without you guys, this channel would not be possible. So yeah, let's continue to make that positive community and help each other out. We're starting with SPY, as always, which tracks the S&P 500 on the 180-day chart. So looking at SPY, we know that it's been holding these major SMA lines, right? We know that it's been holding the 150 SMA as well as the 200 SMA. You guys can see that the red line is the overall bullish sign now. You guys can see that we broke out of the bearish trend, and now we're on a more bullish reversal. As you guys can see, we broke out here, we retested the support here, and then once again we're heading to the top. So recall our last video, which was on Thursday night, we talked about how the best time to buy was actually pretty much at the close on Thursday. The reason why this was the best time to buy into the market at that time is because we identified a support around 270 to 271, and I boxed it in for you guys right here, and here's where we closed on Thursday. Note how we kept over the support, you know, and this is where you can buy closest to risk. What does that mean? That means that if you're wrong, you can stop loss out early, but if you're right, you know that it's going to go back to the resistance, which is at 274. So on Friday, we did see, you know, the market surging pretty much near the resistance, 273.96. So 274 is a resistance. Is this a magical number that we stopped at? Not really, right? We kind of expected it to get up there. So what are we looking for in the near future? So because we were able to test on the 180-day chart, we were able to test this major, you know, bullish reversal again, and that we confirmed it just 3 days prior, right? So now we're looking for a breakout pattern over the resistance. So how are we going to break out? Well, one way is once the futures open later today, if the futures manage to gap up over 274, then tomorrow, by tomorrow's open, we expect SPY to be over 274. That is probably the easier way to get up. Now, if we do kind of get rejected during the future when futures open, then we still have a possibility to retest 274, actually a pretty good possibility in my opinion, and then we'll see what happens from there. Because we tested this area, I'm more inclined to say that we're going to break over the resistance. Now, if we do break the resistance, where can we go? Well, the area is around 277.50, around that area. This is where I expect the next resistance could be. But at the same time, if we don't pop over the resistance, then we can, of course, come back down, continue this horizontal consolidation pattern, and it will be around 270 to 271 where we can look for another entry position. So that's what I'm looking at right now. Looking at the 1-year chart, we pretty much have seen this similar pattern, right? We kind of drew this bull flag pattern. We have a bullish 8-day streak right here, followed by a consolidation pattern over here. So we expect another pull, right? Another push higher and significantly higher than this 274 mark. The reason why we expect something significantly higher than this area is because we consolidated for so long. We consolidated for a period of over 1 week. So when we do, or if or when we do push up, we expect the push to be, you know, not only to 275, 276, but 277.50, possibly even more, but we'll see, right, as the days progress. So there's SPY, and let's take a look at TVIX, which tracks volatility. So not much surprise in volatility either. We're looking at volatility on the 180-day chart. We see that as SPY manages to push to the resistance, volatility is once again falling. So falling to 472. So you might be asking, well, Kevin, is this the best time to buy into volatility because we're near the support? But recall what I said, that if should we break out, you know, if SPY breaks out over 274, we do expect volatility to continue falling even below 463. So that's what we're looking for. Let's take a look at 4/CL, which tracks crude oil futures. Crude oil futures is pretty much doing what we kind of expected it to do, but we'll talk a little bit about Drip and Gush, which are the two ETFs that we were looking into the past few days. So here's crude oil futures, right? We know that crude oil has been making this higher low, right? Until now. Now we're pretty much at the support. I adjusted this higher low line just a little bit. You guys recall that the previous line was kind of like angled this way right here. And the reason why I adjusted this way is because now you can see we're pretty much at the major support. This is where we stopped at on Friday afternoon close. So what are we looking for this pattern? So crude oil has, kind of surged above, but wasn't able to maintain the light blue line, which is the 20 EMA line on the 180-day chart. And note that we are now declining. So if we're not able to hold this support, and let me get rid of level 2. If we're not able to hold this support, we're looking for a major drop back to around 63.50, around that area where we can find another support. That is a huge drop, and this is something that we can take advantage of. So you guys might be asking, I'm still in drip. Why? So should we take a position in drip or gush? So one thing to note is, I think one of you guys pointed out to me in a couple of videos ago is, Kevin, why didn't you invest in things like DWT or UWT? So UWT is the ETF that actually follows crude oil futures almost exactly 1-to-1, whereas drip and gush doesn't follow. There's a correlation, but the correlation isn't big enough, since such that we saw crude oil futures pulling down 2% nearly on Friday. But what did drip do? Drip only went up not even 0.5%. So from now on, we're going to be looking more towards UWT and DWT as potential investments, and I'm not going to be covering drip and gush just as much. I'm actually waiting for an exit point on a drip, so this is just something to watch out. Just drip and gush are exploration, so it kind of attracts those companies, and as well, it's a little different from just crude oil inventories and just crude oil movement, crude oil futures. So here it is. Crude oil is coming down. We're looking for it to break this support. It might come back to the 20 EMA before it starts heading back down again. Surely this is a downtrend, right? We identify this downtrend because the magnitude of the decline. We didn't expect crude oil to push all the way back to the peak. The reason is, look, this was the previous support, which should act as a resistance this time. Note how we didn't even get to this resistance line, showing how weak crude oil is, and now we're heading back down. So that was the confirmation that, at least the crude oil futures are no longer bullish. So this is what I'm looking at right now. Which ETF am I looking into? Well, the ETF is actually DWT. So DWT does track inverse crude oil, and you can see that how it's been declining. So this is one thing to keep in mind, how we've been declining. But note how crude oil went down 2%, right? But DWT went down 6.8%. This was the ETF that we were supposed to take advantage of, but now that we are going and looking into this one, at least we're aware that this is one that tracks oil. So thank you very much for that. That one person who talked about this ticker in the past. And let me see if I can find you. But yeah, so here's DWT. So what am I looking for in the near future? For DWT, I am looking for it to come down, right? Come down and then retest the 20 EMA, and then this is where we can buy in, because we know that this is an uptrend. Yes, this is a declining ETN. You can see that it's been declining, but at the same time, should crude oil continue to push lower, we expect this one to climb even a little bit more before we can go back to crude oil. So this is just something that I am watching right now. All right, let's take a look at /NG, which tracks natural gas futures. We're looking at a chart, 180-day chart again, and the outlook for natural gas really hasn't changed. We know that natural gas has been making higher lows and higher highs, shown by this picture, right, guys? Right here. So you can see that natural gas came down, and this is pretty much the middle VWAP. I don't have the VWAP on here because it's just not on here. It just kind of clutters the graph a little bit, but came down to the middle, and then now we're surging back up. So we talked about how natural gas is bullish. It has been bullish for the past few days. Actually, for the past week, it's been bullish, and now we're looking for a good entry position into natural gas. So we're looking for it to come down, perhaps retest the blue line, which is the 50 SMA. That's when we can take a position and go into natural gas and take advantage of this massive surge up. This natural gas follows the ticker UGAZ or UGAZ. So here we go. Why is this one so interesting? We actually talked about this one is because natural gas has a resistance. Now UGAZ has a resistance at 63.42, right? And we know that should we break over it, which we did, and you guys can see that we reconfirmed the support around this day. Should we break over, we expect it to continue climbing. right? Even over $70. That's certainly possible. $70, $75, because the next resistance that I see is around $77, $76. And because we kind of reconfirmed here, just know that we are on a double peak. But should we start, breaking this previous resistance, this is a good time, I think, to look into getting to UGAZ because of its bullish streak. So that's something that I'm looking for. So this kind of pattern, doesn't this pattern looks like this pattern right here? Do you guys see this right here? This right here kind of looks like this right here, where we had a massive surge up, we had a downward trend back to the 50 SMA, kind of reconfirmed around that area, and then all of a sudden we continue the uptrend all the way back up. We're looking at something similar developing here. Okay, let's take a look at 4/GC tracking gold futures. So gold futures, recall we talked about this one as well. We have a support around 1286.6. That's not very well defined. This support has not been really confirmed in previous areas. You guys can see in the previous 180-day chart, this wasn't a previous resistance necessarily speaking, nor was it a previous support. So when we saw this downward trend, we talked about how gold has a resistance around 1313, and this line has been there. Why is the resistance? So this is the resistance because you can see that it acted as a support here several times before we collapsed. So we can assume that the previous support is now the new resistance. Now that look at the magnitude or how fast it declined, now we're heading back down. So the one that if you were really wanting to go into gold, which I still don't really want to, but if you really wanted to go into gold, JDST would be the more probable or the more profitable move in my opinion. You can see that JDST pretty much has a resistance around $51. It's been consolidating around this area. It's just the margin of profit isn't too much. So this is why I kind of it's only around 2.5%. So yes, you can set your stop loss, but at the same time, this is the profit margin is just not there for me, and so that's just something that we're watching or I'm watching right now. Let's get right to your tickers. You guys called out a lot of tickers, and thank you all for calling these out. So let's see. This first one is Chris. Thanks, Kev. Can you review CVRR? Yep, certainly. So, wow, CVRR. This is a very nice trend. Okay, I like it. So you can see how we had an uptrend followed by decline. Caught it at the which line? This is the 150 SMA. And then now we're climbing again. So the thing is, I agree that this is an uptrend, right? But where would you be most comfortable buying in? Would you be comfortable buying in? Because here you'd be hoping for what? You'd be hoping for a continuation of this uptrend. And now I would ask you, what's the probability that you will see it continuing going like that? Versus if it came down to, let's just say, conservatively speaking, 50 SMA. What if it dropped 15%? And then you're like, now it's we're looking at a consolidation now, and we're at the 50 SMA. Perhaps this is a better time to buy in. I think that's the more safe buy. Look how overextended we are over the 20 EMA. Yes, we had a push up before it came down. Now we have another massive push up. We expect this to come down, then take a position. This is an energy. I think this is an energy stock. So yeah, for this to come down before we invest in this one. But I like this trend. Just wait for that good opportunity. So also one more thing to note for this stock is look at this, right? Okay, I'm going to box in this area. This is just from previous trends. When I'm looking at the 1-year chart, anytime you bought in around this area, what would have happened? Well, in the next few days or a few weeks, you would have saw your account go lesser and lesser and lesser and lesser. And at some point, you're going to be like, man, I can't hold this any longer. Or you might be. You might not be. But you're like, I can't hold this any longer. For some reason, it broke this trend, and now I want to get out. And once you got out, what happened? Boom. We had a massive surge up. So I'm questioning the same area here, right? If you got in somewhere around here, what can you say? Well, you might be saying the same thing, where what if it comes down and you're like, man, this is coming back down. What did I do? You just want to, buy in a better position than where we are right now. So, all right. Samuel, thanks, Kevin. For AMD, I'm looking for a reversal signal and nice analysis on MU. Okay, so AMD is actually a really interesting one that you called out last Thursday, and I actually didn't really talk about this trend because we talked about how we're, I told you a little bit about like how let's take a little bit of profits a little bit, but here's what we're looking at. I just want to show you, and we're looking at, let's take a look at the 3-year chart. What is happening? What kind of trend is this? This is the 3-year chart. Bull flag pattern. Why did we have this massive surge up of over 50%? We are looking to break above this area, and this is going to go even higher. Now, where can we expect it? Well, we can certainly expect it to break $15. We expect probably to 16 or even more. And this is something that I didn't note, that we're on the 3-year chart. So you can imagine how long AMD has these is weeks. These bars represent weeks. So weeks after weeks after weeks, we're making this bull flag pattern, and we didn't even really catch it. I don't think anyone really caught it until now. Now we have all a surge up, right? So you might be asking, well, when is the best time to buy into AMD? So I think, Samuel, you're looking at AMD. AMD went up another almost 5%. You guys can see that AMD is now on my watch list now, because this is a really interesting one that I'm looking to participate in. Not right now, but soon. When can we get in? Well, look at here. When we started the bull, this bullish streak, we had to retest the 20 EMA. When we get to the 20 EMA, or the light blue line, and then confirmed it at this area, then that is the time that we could take a position, because we know where to set our stop loss. So in this case, what am I looking at? Well, here's the light blue line, right? We expect this to, possibly catch up a little bit, but in the next few weeks, we're looking for it to decline back to the 20 EMA. Whether it's at $13, it just depends on when this happens. $13 or even $13.50. Whenever this happens, that's when I will take a position on AMD, and then we can write it up. But this is a very promising sign. Know how this, this increase, let me just get a little drawing tool out and just show you that the magnitude of this increase was 500. Okay, so it's like over 500%. Obviously, we don't expect AMD to go up another 500%, but we do expect it to get over this previous resistance, and this, if you buy at the 20 EMA, offers a significant profit potential. So this is something that I'm certainly looking at. This looks like a breakout pattern over the previous, this bull flag resistance, and now, yeah, great call out. Let's watch this one. Adrian, love the videos. A breakdown of Disney ticker DIS would be much appreciated. I believe it's near major support levels. Okay. Yes. So Disney was one I've been actually kind of tracking since 2007, last year. And the reason I was tracking was similar to where you stood, right? It was because it's been declining. I was looking for a reversal somehow, and now we're pretty much at the support. So I do agree that the support is situated around 98.66. The reason why I don't really like Disney is because the profit potential, and this we're looking at a 4-hour chart, even if we look at a 1-year chart, the profit potential of Disney just moves really slowly. Note that if we do buy in the resistance or the support area, right, 3-4%, I mean, certainly possible, but this is also on a downtrend. Look how we kind of just reached the previous resistance area, and now we're kind of coming back down. It's just not very enticing to me, giving this sort of pattern. You could, if you're patient, if you're, more of a conservative trader, if we do see some consolidation around this area, you can buy in around $98.80. Make sure you set your stop loss a little lower, maybe $1 lower, and then you can, just wait it out and see what happens. It's just, this trend is just a little too slow for me, and you can see, this is a 3-year chart, right? You can see that how lower high, higher low, we're getting squeezed in at some point, and then we're going to see a movement up or lower. So it's just, interesting, though. Thanks, Adrian. All right, Eric. Hey, man. Also, can you talk about HIFL or Herbalife? HIFI? HLFI? HLFL? What is... Well... I don't think I can find that one, Herbalife. Did I type in Herba? Oh, okay, it's HLF. So here it is. HLF. So we're looking at a weekly chart right now, and looks like, okay, so let me see, how much is the, wow. So that was over 50%. So, okay, I like this trend, but there's a couple of things that we just got to watch out, right? We do have a bounce over the 20 EMA line, and it's right here. But the one thing to note is, look how much we've gone up. Even though we've came down, what, say 16%, it did bounce up, but we can see something like this. Look what happened here, right? We came up kind of significantly, came down, bounced up, reached the peak, came down, re-verified the support at the 50 SMA, then it surged. So because we're still so high up, because, you know, we can even, you know, even if we can see something like this, like, oh, surge up, let's say a bull flag pattern emerging, something like this, how great would it be if we got in around this area, 40 something dollars, versus right now $50, right? Even if we got in at $44, you know, that would be more comfortable. Look how we consolidated around this area. We can still, let's wait for some consolidation, and then at the 50 SMA before going back up. So good pattern, just not the time. I think it's similar to the previous example. I think it was a CVRR, where it's kind of too overextended and we just got to wait a little longer. The Giants, thanks for going over drip. I'm in drip, and hopefully, okay, so we talked about drip and gush, right? So I have my eye on TRXC. My name is Rico. Oh, hey, Rico. All right, here's TRXC. Let's look at the 180-day chart. Okay. Right. So TRXC trading at $3.75 transcentric. So, okay. So where's the resistance on the 180-day chart? Well, we're pretty close to the resistance. You guys might argue, well, this might be a resistance. Well, you can argue that this might be a resistance, $4.29. But because we're, you know, so near the high, look how we came down, kind of reconfirmed the 20 EMA as a support, and then gone up. Now we're going up. We're on track to the 200, the 180-day high. Let's just take a look at the 1-year chart really quick. Yeah, so, you know, how good would it be if we caught it when it broke over this area, right? This was the previous resistance. How great would it have been if we caught in here, the breakout pattern right here, right? You guys can see that we broke out over the previous resistance. But now that we're so high up, I'm less inclined to believe that this can still go even higher. We're just so overstretched over the 20 EMA. It's, yeah. My goodness, you guys see that? Look how fast it declined, whether it was earnings or something else. It declined to 200% within a week. That is pretty scary. So, yeah, just not right now, I think, for this one. Okay, Lang, thank you for these informative videos. You're welcome. I try to watch them every day. Can you please look at ZNGA or Zynga? The group recently decreased stock ownership from 70% to 10% Fun Games 2. Yeah, I remember Zynga. I used to play these games when I was a kid. I think it was a long, long time ago. So here it is. This is the weekly chart. I like it. The reason why I like this one is you guys can see that we have a surge up. We kind of consolidated, pulling a bull flag pattern, and now we're all the way back up. So you can imagine we're close to the, you know, we don't know how much it's going to really pull up. You know, it might go up, you know, kind of 45%, and now this time we're at, you know, 27%. We might be near the middle to the end of the bull flag streak. So if you really wanted to go in, you could, but you just got to be very careful, because we want to confirm some point that this is a support or new support or a bull flag pattern. Right now, it's just kind of high up again. We're near the middle to the end, I think, in terms of its... So where could you take a position? Actually, see, we broke over the previous resistance here. I like it. Sure. So if we take a position, let's wait for it to... Look how we came down to the 20 EMA and verified. If we came down to 20 EMA, take a position, make sure we set our stop loss, and then make it, you know, it has a good possibility of going even higher. Let me look at the 1-year chart really quick. Yeah. Yeah. So yeah, let's just wait on the 180-day chart for it to come down to which price? Around $4 and perhaps 38 cents, even a little lower, at least touch the 20 EMA, and that's when we can go in. But not right now at its current price point. Looks a little overextended. Hey Wendy, loving your videos, very detailed. Can you please cover LABD and LABU? So I'll just cover one of those. We talked about LABU because we said that as markets do start pushing up and we expect spike because of the bull flag pattern to push up, we expect LABU, which is the bullish ETF, to push higher. So when people were starting to talk about LABD in the past few weeks, that you guys were like, I even drew in the resistance or support line, right? We said that look how we bounced and now how small we bounced here, right? And because the markets are going up, we expect LABD, or the inverse biotech ETF, to continue to go down, whereas we expect the bullish ETF LABU to continue pushing higher. So now we're pushing higher. So you're asking, I'm bag holding LABD and wondering if you should just cut losses. Thanks so much. Yeah, so LABD, this is a kind of tough one, right? You're in kind of a difficult position because we expect LABU to, even push a little higher. So if you really wanted to, you can wait for LABU to come down to the 20 EMA, kind of consolidate at the area in which LABD would kind of go a little higher and consolidate at that area. That's where you can make your exit. It's just a little uncomfortable where you can make your exit, but at the same time, just note that LABU, we're looking for that continuous uptrend to continue to occur, and LABU can push to 105, even 110, or even possibly higher, as we have seen because the markets have reversed from the bearish to bullish state. David, can we cover cost or Costco, right? So here's Costco right here. We know Costco has had a resistance at 198 or around, let's just say $200, right? Markets kind of like the even numbers, around $200, and now we're pretty much stable right here. So I think Costco is another one where I like the pattern, but it doesn't offer enough potential for gains. Like if we start buying, so where can we buy in, right? We can buy in at the support around 190 now, and then we can ride this back up. I like the pattern. You guys can see that how we're going up, consolidating in this area, and we do expect another push up in the near future, right? You guys can see that push. It's kind of near the peak, but would you want to buy right now? I'd argue not, because we've tested this resistance once, we tested this resistance twice. Even though we can break over the resistance, know how we broke over the resistance, but still kind of came down. This is an ascending triangle pattern, so I think it's a good pattern if you guys wanted to go into this one. It's just not the best one that we can look at right now, but I like this pattern. The best time to buy in is again 190. That's where I would be comfortable with. All right, so here's the last one. Did we tackle this NXPI last time? Let me take a look. So if I didn't tackle this one, I'll just tackle this one today. So here is NXPI. You said, Addy boy, thanks for calling my ticket. Is it a good one to buy? Can you provide some analysis? Could go to 127. So, all right. So given what you said, 127 is past the previous 180-day high. So is it realistic? Sure, it is, possible, but it's not too realistic. We shouldn't assume that it'll break the previous resistance, because if we say it broke over 127, well, we can say that it can go to 130. So let's just not say that it's 127, but at the same time, look how fast it declines, and then look how fast it increases. Let me just take a look at the magnitude. Yeah, 100 plus, wait, what? So over 10%, right? So it's currently trading at $114. So looking at this trend on the 180-day chart, I think we're at a good buying point. If you wanted to go, if you're looking at this one, you're eyeing this one, this is certainly a good area, time to buy. Look how we bounce from the 50 SMA every single time. We kind of consolidate at this area. Yeah, this is a pretty decent pattern, in my opinion, to, if you guys got in on Friday, to take a position. This is a good one. 1 year chart, let's just quickly take a look. Wow. Well, so what was the cause of this? Oh, okay, so wow, 24%. Okay, yeah, I think it's a good one to, but make sure you also set your limit order. This one you have to set your limit order because it declines way too quickly for someone just to even grab on. Look at these spikes, right? Gap down, gap down. Look at how much it gapped down. So like the pattern, make sure you set your limit. So once you've gotten your, 3-4% profit, I would just exit and then reevaluate at a different time. So, all right, that's it for this stock analysis. Thank you very much. I told you guys I would provide a PAYC content video. Yeah, I'm still working on that one. I haven't really gotten into it because I've been pretty busy, but thanks again for watching all these videos. Like if you like this video. If you didn't like it, I hope you like it in the future. And I will see you guys tomorrow, Monday, for another stock analysis. It might be a little later than usual, but that's how it is, right? All right, thanks again. I'll see you guys tomorrow.